Morning traders, it's the 12th of December. We're Signal Centre Talking Bull. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mate. All right?
Yeah, good, thank you. Just
Excellent.
discussing our heartache off the air there.
Yeah.
England boys
Everyone's
crashing
looking at
out.
us. Yeah, everyone's thinking, looking at us, thinking, well, if you did your analysis properly, you'd know it, you'd expect it. But
I think we all
yeah,
did really, but it just kind of get carried away, can you?
yeah, exactly. Yeah. I mean, it was overall the game was like I thought England did deserve, more out of it.
Yeah.
Just sort of like wasn't meant to be.
No, we didn't have that killer instinct, and that's often been the issue, hasn't it? Really?
Yeah, I think Saka was getting chopped to pieces all the time, wasn't he?
Yeah. Good
And
old
just
Saka.
and that's what we needed. He seemed to do quite a lot down the right and sort of,
Then he got taken
but
off.
yeah,
Bizarre.
yeah,
Right, enough of that. Let's get on to talking
yeah.
about the markets.
As Moch says, at least we can sleep now. I did actually say to my son, I said, well, at least I haven't got two more games of stressful skullduggery.
Yeah,
So yeah, move on. We
yeah,
go again.
indeed. Okay, let's go to the headlines then. So, US PPI data beats expectation. We saw the US producer prices increased 0.3% for November, with a year-on-year declining rate to 7.4% from 8.1%, but that was slightly above the consensus forecast of 7.2%. We've also seen US confidence recover. The University of Michigan Consumer Confidence Index recovered to 59.1 for November from 56.8 previously. And we also saw the dollar regain some ground as US yields edged higher on Friday with stronger US data, also providing an element of support for the dollar, but with position adjustments into the weekend also a significant factor. We've had the UK GDP number out this morning. The data recorded a 0.5% increase for October after a 0.6% decline in the previous month. That was slightly above the expectations of 0.4%. So we've seen a decent move higher in some of the sterling pairs already this morning. And we do have some major events this week. So that's really where all the focus is going to be. We've got policy decisions from 4 major central banks, as well as latest data on US consumer prices. So that's going to be very well watched. The consensus forecasts are that the Federal Reserve, the ECB, and the Bank of England will all increase interest rates by 50 basis points this week. Merry Christmas, everybody. And finally, there were some increases in the amount of dollar shorts. The CFTC data, which is published on a weekly basis, recorded a small net increase in long non-commercial euro positions, and short dollar positions increased to the highest level since July 2021. So the smart money, if you like, is getting more short of the US dollar. Okay, let's get into some charts. Steve, do you want to kick things off for us today?
Yeah, sure. I'll just share my screen. Yeah, going to take a look at Bitcoin. Got this potential formation. It's either a double bottom or it could be an inverse head and shoulders. Still, it hasn't played out yet. The double bottom would have a neckline all the way up at 18,174, which would also be above the cloud. As you can see, over the last few weeks, we've had this little bit of a rally, and we have got a great opportunity to break through the cloud where the resistance is a little bit lighter than it will be in the coming days and weeks. However, we seem to be failing to sort of like get above resistance around all the way up to about 17,500. In fact, the last 4 days of price action have been pretty negative, from a shooting star candle last Friday, Saturday negative, Sunday negative, and this morning we've had a break lower. Take a look at that on the 4-hour chart. Gives us a little bit more indication. We turned slightly positive on the 4-hour chart last Tuesday, and we've remained above the cloud until, well, we're still above the bottom of the cloud, but we're in the cloud now. So potential for a breakdown, and you can see that this obviously as well can show this head and shoulders formation appearing again. Now this one is more of a bearish formation rather than the inverse. Quite like this one, especially if we get a nice break of this well, the horizontal support at 16,700. But I'm not going to get carried away with it until we get a break. Obviously, until then, the formation, we should really ignore that. Also, yeah, there's a nice little spike here. So this, for me, this 16,700 level is looking pretty pretty decent now from a supportive point of view. We had a spike lower there on the 30th of November. Yeah, 16,722, and we got down here 16,734. So that's definitely a level to watch moving forward into the week. Resistance side, as I say, above 17,500. We'll still get some resistance at 17.6, which was a previous swing low, and then there's probably a decent gap up after that. So jury's still out on the cryptocurrency. It just feels like it's been going sideways for way too long now. Take a look at that gold. Let's take a look at the daily chart. Gold is really trying desperately hard to break through this 200-day moving average and the big band of resistance that we've got all the way up to 1810. Had another attempt on Friday, got up to 1806 before pulling back, closing just below the $1,800 level. And today we're under a bit of pressure. We're down at 1790. The pivotal area that we look at the moment is around about the 1765 to 1770. That will give us a little bit of support currently. Below there, the more serious band of support comes in at 1730 to 35. We've got this double bottom formation, which has a measured move target of 1844, so that's still on the cards. And I'm sure a break of 1810, we probably get quite a quick move higher once that level is taken out, if it is taken out. The inverse head and shoulders is shown even more clearly on the silver chart. That's looking to push higher. That's hit a new highs we haven't seen since all the way back in April. So silver really fighting back a lot more aggressively than gold. Definitely one to watch. That high, it will be the next resistance, 23.53, and the measured move target for the inverse head and shoulders is at 24.92. On the bid side, we've got support all the way down. This previous resistance will now turn into support, so we'll give it a little bit of a blue color to make us aware of that. Copper is trying again also to push higher, push above the 200-day moving average. But Friday's price action failed, also posted a shooting star type candle. So we really need to watch today's price action. And the bulls will really need to push prices above Friday's high, and ideally above the high of the 14th of November. That's coming in at 396. We've got obviously a $4 will be a bit of psychological level, but if we can manage to get above that there and close above there, that will really open up the upside. And again, a potential for a double bottom formation. That has a, well, have we got a measured move target on that? We haven't at the moment. Let's get a measured move target on that. Let's say measured move target on that is a move to 443. So 43 cents above the $4 level. Taking a look at crude oil, it seems to be remain under pressure, and it's well below now this support area that we had at $76. This is WTI crude oil. No real support now till 61.50 in my eyes, although it won't be just a straightforward sell-off. It's going to be a rough old ride for the bears in the market. But as you can see, we've got nearly 6 days of prices closing lower, and we're trading slightly lower on the day. Support coming in today at the $70 level, and resistance, as I say, around about the $76. Brent crude oil, same sort of price action. Yesterday or Friday's price action resulted in a doji candle, which is a sign of indecision. So maybe we're getting a little bit of momentum stalling with the posting of these new lows. That indicates bearish divergence. But on the back foot again this morning. Low of Friday, 75.26. That will be support, and the high that we're looking at, or the resistance really we're looking at, is around about 82.40. So quite a way off, $6 higher. Natural gas, however, has finally filled the gap. It did it on Friday afternoon. We had this breakaway gap from the weekend of the 2nd of December to the 5th of December. And then all last week, we were trying to fill that gap. Had an attempt Thursday, which failed, but Friday we managed to break higher. And this morning, we've opened up a lot higher. We're in the Ichimoku cloud, so we're still within that bearish trend or sentiment, and that gap we'd expect to be filled. But is it going to take a week like it did last time? Just to give you a little bit of a clearer picture of what's gone on. The breakaway gap from here, from the 620 level, we managed to sort of like open up 30 cents lower. And over this weekend, 630 was the high from Friday, and we've got a gap all the way up to 670. So really would be interesting to see if price action can quickly fill this gap before maybe kicking on. But yeah, overall natural gas, we're really looking at this head and shoulders formation, but potentially obviously the reaction from this 533 level, which is a level we've been talking about for quite a while now. That's what was one of my gun to head trade ideas, with the stop just below it, which if we'd have let's play out, I would have actually been filled this morning. It would have taken me all that time. I think the target on it was at 620. Actually, I would have been filled Friday afternoon. The target on it was 620 or something like that, I think. But yeah, so that could be quite an interesting market this week.
Lovely. Thank you very much, Steve. Let's take a look at FX then, shall we? And start with the dollar index. So not much has changed here. Still looking at this top pattern on the daily chart. If we look at price action over the last couple of days, very undecided. On Friday we posted a doji, and as things stand at the minute, we aren't really going anywhere fast. Still below the neckline of this head and shoulders, which I've got in at around 105.34. And obviously with that data that we saw about the CFTC numbers, still looks like the bias is going to remain on the short side for now. So for me, the head and shoulders pattern has completed. We are looking for lower levels. The next major support to look for is 104.11. That was the low that we posted last Monday. Below that, looking for the 50% fib level to get some action at 102.15, then potentially start picking off some of the others on the way down. Ultimately down towards this measured move target of the head and shoulders top, which comes in at 95.96. Looking at euro US dollar, that is still struggling at resistance. We saw another touch of the 105.95 level, which again was this previous swing high from the 5th of May. We're coming up just shy of a 38.2% fib level at 106.10, and we've got a measured move of a bottom pattern here coming in at 106.52. So price is likely to continue hitting its head on these kind of levels for the time being. But ultimately, I'm expecting a break higher and for prices to continue accelerating to the upside. But we could see a pullback probably to around 103.50-ish to consolidate some of these recent gains that we've seen. Looking at cable, that's off by 0.2% so far today. We did have the GDP number out, and again, we are stalling at a pretty significant level of resistance. This is at 122.93, also a 50% fib level, trying to get above that and close above it. Haven't been able to do that just yet, so prices are likely to continue moving sideways and in choppy fashion until we can get a decent-ish move to the upside. And you would expect something will happen with this week, given the amount of data that we've got due out that is going to be considered high impact. Looking at dollar CAD, nothing much changed here. We saw, well, very close to an invalidation really of this head and shoulders top pattern that we've got. So not a lot happening there. Last few days have been very range bound, not really going anywhere. If we look at dollar Swiss, we can see that closed below major support at 93.70. And is grinding lower, coming close to a 61.8% fib level at 92.88. So still looking for lower prices there. If we look at dollar yen, we can see that is still trading within this bearish channel that we've got highlighted on the daily chart. Got some resistance locally at 137.65. So I think while that remains in place, we are expecting prices to continue moving lower within this bearish channel, ultimately towards this kind of region down here, which is around 131.40. Not really much else to go into, to be honest, on the currencies. They are kind of in a bit of a holding pattern, it would seem, at the minute, waiting for what happens with this data for the rest of the week. So unless there are any requests for specific FX markets, I'm going to leave it there.
Okay, mate. No worries. I'll have a look at mine. If you,
You've got indices.
yeah, I'll get indices up. Take a look at indices because they're under a bit of pressure this morning. We can sort of like dive in. Maybe we'll dive into the Asia Pacific first.
Actually,
China.
we've just had someone ask about Aussie New Zealand dollar. Shall I take a quick look at that?
Yep, sure.
Stay on FX while we're there. Okay, so Aussie New Zealand dollar. This completed an impressive head and shoulders downward sloping one not so long ago, and then we posted some sort of continuation pattern here, maybe a bearish flag, and then prices continue to accelerate lower down towards the measured move target of this head and shoulders top, which was at 105.52. That also marries up with a 78.6% Fibonacci retracement level of this move here. So this big bullish trend that prices were trading in for a considerable period of time. So we've pulled back to this level, and in terms of the sort of candles that we're getting around here, this one was quite interesting. Posted quite a long-legged doji, followed by a decent move to the upside. So that would be a morning star formation, and prices have bounced from that level. So providing prices can continue to hold around 105.66 to 105.52, then I think there is potentially some room for a bit of a corrective move higher. But clearly, the bias is on the downside at the moment, the bearish side of things, and any rallies are probably likely to be limited to this kind of region here, which is around 107.50. So really nice technical play out here of these moves. Break of channel, head and shoulders top. We've got a continuation pattern in there as well, and it's all pulled back to some interesting technical levels as well. So yeah, trading quite nice from a technical perspective at the minute.
Nice one.
Sorry to interrupt you, Steve. Over to the
That's right.
indices.
No, that's all right. I was going to like dive into the China 50 and Hang Seng because they've had quite a nice rally over the last couple of weeks, and although sort of this morning's price action is a little bit on the back foot, we can see that sort of we're engulfing Friday's spike higher that we saw in China 50. That's stalled just in front of the 200-day moving average, so be aware of that. We are in the midst of a inverse head and shoulders formation. That is a measure move target all the way up to 14,400, so 1,400 points away from where we are now. So there's still a long way to go there. Will it actually get there or not? I'm not sure. It's I think there's concerns about the opening up of the economies, and that it could lead to a spike in infections. Hang Seng, similar sort of price action, and again we ended up with a little bit of a Arami candle. It was a bullish candle. We broke to highs that we hadn't seen since the end of August. And it's around the 200-day moving average, but the 200-day moving average seems to have won that battle so far. Today's candle looks pretty ominous at the moment, but still a long way to go before we get a close there. But yeah, overall on the back foot, and really sort of the measured move target as well for that is 22,170. So a long way to go for there. Dow and the US indices don't look so hot really. They had their move up until the middle of November, and now we've seemed to be stalling. Price action looking pretty negative. Looks a little bit toppy with a head and shoulders formation in there somewhere, which you can see. Support coming in today around 33,400. And the spike low on the 17th of November should obviously add support as well, or be a little bit of a hurdle to overcome. But we've got the downward trending resistance line, and again, that should act as a bit of support today. That's all the way down at 32,840. Again, we're trying this inverse head and shoulders formation in NASDAQ, but it seems to have failed, and we're looking really at this potential for a double top. We can see the two arrows pointing downwards here. The neckline coming in at 11,438, which we just got below last Wednesday and a little bit on Thursday. And Friday's price action just reversed gains sharply as we approach the top of that cloud. So really need to sort of see whether the US is going to join in the Asian party or not. Again, for me, it doesn't feel like it. Feels like we've had our corrective bounce, and pressure's going to come in again. But we have got the Santa rally, which I keep warning people about. Support coming in Nasdaq, sorry, S&P's down at 3,900. Again, the 4,000 seems to be quite pivotal, and we got just short of there on Friday before reversing and bearish engulfing the day. The downward trending resistance line hasn't been breached, or was ever so slightly breached, and failed to continue higher. So S&P not performing quite as well as the Dow. And in the European markets, we're similar sort of price action to the US. Is under a bit of pressure, and this morning as well. We've got support between 14,200 and 14,130. That will be our support. And again, as I've mentioned before, I expect to see quite an accelerated move lower if we manage to break that support. So the double top formation is in play. The neckline is coming in at 14,317. So that's going to be pivotal. I'm still short of this with a stop just above where I got stopped out last time, 14,600, just above there. And FTSE finally, we've had 4 days of negative price action. So sort of pulling back from this level of resistance, and now looking at the next level of support, 7,424 will be key today. The 55, 100 and 200-day moving average are sitting below, ready to capture any drop lower. That's about it.
Steve, thank you very much. Okay, gun to the head trade. So this is where Steve and I pick trade ideas live on the video. As if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with must have stops and targets, and they must have risk reward ratios that are better than 2 to 1. And what we do is we publish them to our TradingView profile every day, so they're all time stamped, and we can follow their progress over the course of the trading session. We close them off at 9 p.m. UK time, just so we've got a line in the sand to restart again the next day. And if we take a look at our ideas from last week, on Friday in particular, I was looking to trade dollar yen. Looked as though it's forming some sort of consolidation or top pattern and poised to move lower in line with the dominant trend at the minute. If we click the play button, we can see that at 9 o'clock on Friday, although it came very close here, it didn't quite hit the stop, but it was offside by about 0.6%. So that was a loser. And Steve was trading natural gas. And obviously, as he covered on his daily analysis of that, we know that that was stopped out as well. Pretty aggressive move higher on that to fill that gap, as we thought it might. But we put our neck on the line. We had a go at it. Didn't work out. That's the way the game goes. We get to reload the gun and have another go today. So, Steve, you got anything ready, or would you like me to go first?
I'm ready sort of on this. Looking at the Dow really, and looking at the weekly chart, we formed this bearish formation, the bearish evening doji star formation. That's pretty negative, and the negative price action has engulfed the last 3 weeks of price action almost fully on the week of the 14th of November, but it definitely taken out the gains we've seen over the last 3 weeks. So on the back foot, I think, this morning for the Dow. And if we look at the short-term price action, we're at a key level. So the 33,400, which is what I mentioned, we've got a potential for this breaking lower. Now you can sort of like look at this in 2 ways. You sort of like look to buy this dip in front of the support with your stop just below it, or as we can't wait around and we've got to give a trade idea right now, I'm going to go for the break of this level. So I'm going to sell here, and the stop can be pretty tight. 100 tick stop in the Dow. That's pretty tight indeed. And let me see where I'll be targeting a move to for 2.5 to 1 risk reward on here. Looking for a 250 point move lower, giving it a little bit of room on the stop side of things. And yeah, that's my trade idea for today. Selling at 33,433, targeting a move to 33,183 and the stop at 33,533 on the US 30.
Okay, cool. Good luck, Steve. I'm struggling today, if I'm honest, to find anything that's really stand out. But I've got to pick something. So I'm going to go with cable, I think. Looking for higher prices here. So this is the hourly chart. Little bit messy, but we can see that the general direction is moving higher. So we've seen prices kind of be a bit range bound over the last couple of days or so. If we look at the price action over the last hour, following the GDP number that we had out of the UK, we can see a decent push to the upside and a bit of a pullback on that. So I'm going to try and buy it here in anticipation of it moving higher. So it's currently trading at a price of 122.39. I'm going to put a stop loss just below this spike low that we posted at 1 o'clock on Friday. So that's going to be 43 ticks, so 121.96. And I'm going to target a move into these highs that we posted last Monday, around 123.34, giving me a risk reward ratio of 2.19. As I said, I did struggle really to find something that attracted me today. I think we are going to see a pretty quiet day today, all in all, given that everybody's gearing up for these big events that are due out for the rest of the week. So I'll get that published up and we can see how it plays out between now and 9 p.m.
Excellent.
Let's take a look at the data then today. So we've already had the GDP out in the UK. We've got labour market data out in the UK tomorrow. That'll be out at 7 a.m. UK time. So obviously before we come on our stream. So we may see some volatility in anything linked to sterling prior to that. But the big one tomorrow is the US consumer prices. This is the latest read on inflation. Now, this has been particularly market moving of late, and I don't think there's any changes expected there. In terms of the data that we're looking for, the forecast is for 7.3%. The previous number is at 7.7%. So we are still looking for inflation to be cooling off, which would be a good thing for the markets at the moment because obviously they're running pretty hot, as we know. And then for the rest of the week, we've got a number of policy decisions. First up, we have the Federal Reserve on the 14th, and we have the Swiss National Bank, the Bank of England, and the ECB all on the same day. That's the 15th of the month. So plenty to happen before we potentially move into a bit of a snoozy period with the markets. So we do need to keep our wits about us this week, that's for sure. Okay, anything to add, Steve?
No, no, nothing to add. Just be careful out there. Good luck trading, and we'll see you tomorrow morning.
Indeed, we will. Have a great day, everybody. Goodbye.
Cheers.